Dear friends, it is really a great pleasure for me to be seeing you all today, and I really want to thank you and to tell you how grateful I am that you have all responded yes to my invitation to have this high-level conference on tackling the COVID-19 crisis, restoring sustainable flows of capital and robust financing for development. Because I really think that this conference is of key importance for many developing countries. I really look forward to welcoming you again in Paris. Good restaurants have reopened, so you are most welcome as soon as possible. We had met last year in Paris on May the 7th with my friend Taro Asso, when he was president of the G20, to discuss how sustainable debt can lead to sustainable growth. These discussions we have under the joint patronage of the Paris Forum and the G20 presidency have never been more relevant, and I'm very happy to be hosting this virtual event today with my friend Mohamed Al-Jadan. Mohamed, I tell you hi. The COVID-19 pandemic is making us go through a health and also an economic crisis that it is more serious than any crisis we have ever gone through. The impact of the pandemic on our economies is already massive, especially in the EU. Since our economies have never been closer, never been more connected, the one with the others, we have no choice but to work together. No country will succeed alone. No country will go out of this crisis alone. If one country fails, it will threaten the recovery of us all. I would like to quote my friend Kristalina in saying that without any doubt, we are all in this together. Many of us have taken swift and massive domestic measures to support our companies, our employees, and our households. In France, we did not hesitate and we did not count. We took all necessary measures, including through partial unemployment schemes, in order to protect incomes and our workforce. However, it is our common responsibility to ensure that all countries have what they need to do whatever it takes to support their economy. We cannot let the crisis destroy years of constant efforts to attract investors and support growth. These countries need international financial support and need concrete solutions to face this unprecedented crisis. This is precisely why we are all here today, to design concrete solutions together. In that regard, I would like to praise the G20 and the Paris Club for having been so quick and efficient in their reaction to the crisis. The decisions they took as early as April are historic. First, the international community agreed on a significant increase in the level of financial support provided by the IMF, the World Bank, and other multilateral development banks. But for the first time ever, Paris Club creditors and non-Paris Club creditors decided together to launch a debt moratorium, the Debt Service Suspension Initiative, to the benefit of 73 poorest countries in the world. And I really want to thank the Paris Club and the non-members of the Paris Club for that. Now, we need to go further. And that's the purpose of this initiative and this conference. First, we need to ensure that the debt initiative is implemented fully, forcefully, and immediately. 41 countries have already requested to benefit from the initiative. This is a good result. But we have to make sure that on the creditor side, all public creditors are fully involved. All public creditors, should they be ministries, development institutions, export credit agencies, or any other type of agency acting on behalf of a government should implement the initiative as one. Second, we need to start thinking about what comes next. We will have to take decisions at the end of 2020. We could decide to extend the initiative by a few months, or we could decide to already start a new phase that could involve deeper debt restructuring for some countries on a case-by-case basis and in a multilateral framework. Ensuring and enforcing robust multilateral rules will be critical. It is a core condition for the debt treatments to come. But we should also work together to avoid new situations when countries are stuck with excessive debt. New sources of financing should be fair and sustainable. Third, we need to ensure that we have the appropriate toolkit to finance countries suffering from capital outflows and adjust this toolkit if need be. Some countries now need help to stabilize their economy. Some IMF instruments might not be fully adapted to this unique crisis. We might also need instruments to help investors come back and restore market access. Going forward, we should find ways to strengthen resilience and reduce the excessive dependency of some countries on external financing, which is a real vulnerability. Fourth, we should keep focusing our efforts on Africa as proposed by the French President Emmanuel Macron. The economic development of Africa is one of the highest priorities for France and for Europe. I will be very honored to chair the panel dedicated to this issue in a few minutes, and I look forward to hearing your thoughts and reporting them back to the President de la République. The crisis is jeopardizing the sustainable development goals that we had set for 2030. Our ability to live up to this challenge depends on our collective energy and determination. Africa cannot wait. We have to be quicker. Public financing flows should be more focused on the poorest countries, and they should leverage more private financing. We should also launch a collective initiative to support the African private sector, in particular SMEs. To conclude, I would like to insist that this is only a few of the numerous items that we have on our plate today. I wish all of us a very productive and fruitful conference with the view to be as concrete and operational as possible, and I really want to once again tell you thank you for being here and for participating to this conference. Thank you.
Thank you very much, my dear friend Bruno, and thank you for co-hosting this. It is a real pleasure, and thank you everyone for being here, and good afternoon, good morning, good evening, wherever you are. I hope your families, your loved ones have been healthy and safe during these tough times. Thank you all for joining us today. It is a great pleasure to co-host this event, and it is really a challenging time that requires this collective thoughts and efforts. The COVID-19 pandemic has taken a great toll on the human lives and have caused tremendous suffering for many people around the world. This crisis is unprecedented, and what started as a health crisis have quickly transformed into an economic crisis. In fact, the COVID-19 pandemic has evolved to be the biggest challenge facing the global economy since the Great Depression in the 1930s. Global economic activity is expected to contract sharply in 2020 in almost all countries. Notably, emerging markets and developing economies face heightened vulnerabilities against the backdrop of high debt levels, declining exports, and significant capital outflows. In addition, elevated uncertainty and heightened risk aversion have triggered unprecedented capital outflows from many emerging and developing countries. It is estimated that over $100 billion departed these markets early this year, impacting liquidity levels, exchange rates, and debt sustainability. G20 countries have taken immediate and exceptional measures to address the COVID-19 pandemic and its intertwined health, social, and economic impacts. These measures include implementing unprecedented fiscal, monetary, and financial stability measures, and ensuring that international financial institutions can provide critical support to developing and low-income countries, as my friend Bruno have just mentioned. Here, I would like to express my sincere thanks and appreciation to all G20 members countries for their spirit of cooperation and solidarity in acting decisively and collectively to address the challenges stemming from the COVID-19 pandemic. Let me briefly outline the key actions that have been taken by the G20. First, the G20 finance ministers and central bank governors have agreed on a joint action plan to support the global economy during and after the COVID-19 pandemic. The action plan sets out the key principles guiding our response and our commitment to specific actions to drive forward international cooperation as we navigate this crisis and look ahead to a robust and sustained global economic recovery. Second, the G20 member countries have injected an unprecedented over $10 trillion into the global economy, the largest stimulus ever, by taking swift, wide-ranging, and substantial actions in response to the economic and social challenges stemming from the COVID-19 pandemic. Third, the G20 has worked with international financial institutions to swiftly implement a strong financial response, ensuring increased support and access to emergency financing, thereby strengthening global financial stability and resilience. Fourth, the G20 has agreed to a holistic initiative that calls for a debt suspension, as just mentioned by my dear friend Bruno. I believe this is a very important initiative, and we need to ensure that we continue supporting it. The international community will consider a possible extension, of course, in the second half of this year, taking into account the findings of a report from the IMF and the World Bank Group on the liquidity needs of eligible countries. In some cases, there is a need for sustainable and orderly sovereign debt restructuring with the participation of the private sector creditors. A recent example of this is the case of Argentina. And I would encourage private holders of the debt to really consider this in a positive manner. And I take this opportunity to strongly encourage private sector creditors generally to participate in these efforts when requested by the borrower countries. While these measures have lessened economic jolt and contributed to the recent stabilization in financial markets, the situation remains extremely challenging. We need to take further actions. Therefore, we are organizing this conference in cooperation with the Paris Forum to discuss policy options and how they could promote sustainable financing for developing countries, support the return of capital flows to the emerging markets and developing countries, build resilience, and promote more sustainable sources of financing. I look forward to our discussion today and the recommendations that will come out of this conference as we focus on supporting a fast recovery to achieve strong, sustainable, balanced, and inclusive growth while enhancing financial resilience. With this, let us begin our first plenary session, in which we will be hearing presentations on the topics of the conference. The aim of this session is to set the stage for the follow-up discussions during the breakout sessions. Before I hand the floor to the presenters, allow me to share a few housekeeping rules. Please keep your microphones muted at all times. I will call on the speakers. They should unmute their microphone and make their interventions. Once the speaker is done, they are asked to mute their microphones again. If you face any technical difficulties, please have your team contact our team to resolve it. Let me go to our presenters. It would be appreciated if presenters limit their interventions to no more than 5 minutes so that we can have enough time for the rest of the participants. We will begin by the Managing Director of the International Monetary Fund, who will provide a presentation on the current situation and discuss possible remedies. My dear friend Kristalina, the floor is yours.
Thank you very much, dear Minister Lemaire, dear Minister Al-Jadaan. I'm so very grateful that you're bringing us together and for your very thoughtful, sober remarks. We all recognize that the human cost of this crisis is immeasurable, but the economic fallout we can measure, and we recently put a number of what the world is going to lose in these 2 years, 2020, 2021, about $12 trillion. This is equal to the combined annual output of Japan, Germany, Italy, and Spain. It is a dramatic loss. We recognize that also today, we can have some confidence that the worst of this shock is behind us. The tremendous pain that we have experienced by putting our economies in standstill and the enormity of the uncertainty in these first weeks. I still remember, Mohammed, when we were in Riyadh, when the crisis started. We now know better how to cope with it, and we have 3/4 of the world starting a reopening. We also know that this reopening is going to be uneven by countries, by sectors, as long as we don't have a vaccine and or treatment. And we also know that it would be a partial recovery in 2021. Very important for today's discussion, we also know that it would be the developing world most severely hit. Why? Because of the combined impact of weaker health systems, lockdowns countries are going to, commodity price drops, tourism revenues evaporation, remittances shrinking, all of this coming at the same time. And therefore, it is right that our conversation today is focused on emerging markets and developing economies. So I want to make 3 points. First, the granularity of the shock for developing economies. When action was taken on a massive scale, and Mohammed talked about the size, over $10 trillion of fiscal measures, plus central banks coming with massive liquidity, this has benefited emerging economies tremendously as long as they have strong fundamentals. So for these countries, what we have seen is fairly quickly they could return to markets, issue bonds, raise money at relatively low costs. In the first 6 months of the year, emerging market governments issued $124 billion in bonds, and 2/3 of this came from April on, after the stop in issuance in March. But for emerging markets with weak fundamentals or very high level of debt or hard-hit sectors like tourism-dependent economies or conflict-affected fragile states, there is no good news. They do not have access, or they don't have access at any reasonable cost. So from sub-Saharan Africa to Latin America to the Middle East, what we see is countries with growth prospects severely diminished. And it is very important that we recognize the attention these countries deserve. And I want to second Bruno, especially on Africa. Africa was on the move. Now it is put in a tough situation, should not lose a chance for a transformation. It has started before this crisis. That takes me to my second point. We ought to bring strong financial support in a sustained manner to the group of countries that are most severely hit. And that means for the financial institutions, the IMF, to continue to lean forward as we have been doing it. And I want to thank Bruno for encouraging us to think what more we can do. We have done the unthinkable. We have provided 72 financial lifelines in less than 3 months. We now have in our total exposure of 250 billion, more than 1/3 done in these 3 months. And we recognize that what we got as support to double emergency financing, to triple concessional financing, is right on target to help the countries that really depend on this help, or otherwise they would fall off the cliff in this crisis. What we see, though, is that we have to tune up our instruments even further, especially for helping low-income countries and tourism-dependent small island economies. And there, our engagement with the membership to shift more SDRs from advanced economies to these highly vulnerable countries. This is what I hope we can do together, rally support for a relatively low cost for advanced economies, high impact for countries in need action. We also have to continue to concentrate on high debt distressed countries. And there, I could not praise you more, both the G20 and the Paris Club, for what you have achieved through the debt service suspension initiative. And yes, we will have to soon think about what next, and what next would require country by country restructuring for those that simply cannot come above water without a determined action. And Mohammed, I agree very much with you on Argentina. Private creditors have to see this as a moment of action. Let's see how the country and the creditors can come together. And that is what we have to strive for: collaboration between creditors and debtors in a rational, mutually respectful manner. The bank, the World Bank and us, we will do our part for debt transparency and for prudent debt restructuring. And that takes me now to my third and last point. We would see also an incredible opportunity in this crisis to do what we have done after the global financial crisis: shift gear towards more resilience. Then we fixed on the banking sector. Today, we have to expand the concept of resilience beyond. I would call it the new religion of the IMF. And it takes 3 very important parts. One, make sure that as governments expand further fiscal measures, they do it with accountability to the taxpayer. You hear me saying, keep the receipts, spend, keep the receipts. And we want to see taking advantage of the digital transformation to move governments to e-platforms so they can have efficient and transparent public spending, and also action to clear up red tape so private businesses can flourish. 2, we want to see in this resilience not only fiscal sustainability, but also environmental sustainability. Low carbon, climate resilient growth. Now is the moment, as we put public money in place, to be smart of how we use this money. And finally, last but not least, embrace that the concept of investing in people, in education, in health, in social protection, in equality. Because if we use the crisis as an opportunity, we will come on the other side as a more resilient, more efficient, more inclusive, more sustainable global economy. Thank you.
Apologize, we're having a little technical problem with
Okay,
Mr.
you can hear me
Ajada.
now? You can hear me now?
Yes, we hear you.
Okay, David, are you with us?
Yes, David Malp is here.
Okay, I was just introducing you, David. I'm sorry. It seems that nobody heard your introduction. I was saying my dear friend David Malbas, the World Bank Group President, will provide a presentation on the current situation with a special focus on developing countries. David, the floor is yours, and thank you for being here.
Thank you very much, my friend, Ministers El Jadaan and Minister Lemaire. It's good to see both of you. Good to see Kristalina, and good to see everyone on the screen today. And I'm glad to be here. I spoke at this forum a year ago on the importance of debt and investment transparency and the difficulties of achieving it. I'm greatly encouraged by the progress over the last year, though we need to press ahead. Debt transparency is vitally important for achieving good development outcomes. All of us have that as a goal. Even before the pandemic, many developing countries had accumulated unsustainable debt burdens, causing underinvestment and slow growth. Waves of debt happen frequently in history, and we know how hard it is to find solutions. So I want to congratulate this group and the G20 for tackling the problem. As you know, conditions didn't get easier over the last year. With the pandemic and the economic shutdowns, the financial stresses worsened significantly in recent months through recession, unprecedented capital outflows, and declines in exports and remittances. As Kristalina rightly said, the human cost has been immense. Hundreds of millions of people in the developing world will be driven back into poverty. My focus last year was the importance of debt transparency and the reluctance of debtors and creditors to go in that direction. Many parts of the system rely on asymmetric information where one party or another takes advantage. That cycle is hard to break out of. The G20 consensus on the debt suspension initiative was an important step forward. If the large creditors and debtors can work together in a coordinated way, as they have been doing, a lot can be achieved. There's substantial benefit to all from fuller use of common documentation for the debt suspension. One current challenge is that several debt workouts related to official bilateral credits are happening on an ad hoc basis, often with lack of transparency and coordination with other official creditors. Still, rough estimates show that half of the debt eligible for relief under the initiative and 3/4 of the debt service are being addressed so far, with those shares likely to grow, providing increasing fiscal space for the participating IDA countries. It's been particularly welcome for China to participate, led by President Xi's support for this new debt process. Transparency will make debt and investment more productive, help with accountability, and support the economic recoveries that are vital for poverty reduction. In the medium term, it can lead to more investment in developing countries with more and better financing techniques. That's a big step forward for our goal of achieving good development outcomes in which all incomes rise, not just the incomes of the elite. Good progress is being made on transparency. I'd like to describe three major World Bank efforts. First, starting June 19th, we were able to begin publishing significant new data about the debt of developing country governments, including new information on the creditor country composition of outstanding public and publicly guaranteed debt, and the projected annual and monthly debt service payments, including information on interest payments and debt repayments. In September, we will be releasing new information on debt stocks as of the end of 2019. We would like our DRS debt reporting system to include information on the basic terms being reached between official borrowers and lenders, the interest rates, the maturities, the grace periods. That will be a big step forward. Second, on July 1st, we began implementing important new support for debt transparency as part of IDA 19. It's called the Sustainable Development Finance Policy, SDFP. It provides substantial financial incentives for debt and investment transparency as IDA countries implement what we will call PPAs, Performance Policy Actions. More resources will be allocated to countries that take concrete actions related to disclosure of loan contract terms and payment schedules. The new process will help give assurance that additional fiscal space has significant development impact. And third, as the World Bank provides a surge in operations to respond to the crisis, our engagements and technical assistance are supporting countries in the implementation of greater transparency. We need borrowers and lenders to avoid violations of negative pledge clauses in our relationships. For example, we're working with Angola to relieve liens, freeing collateral and repairing the breach in the World Bank negative pledge clauses. The problem has delayed implementation of IFI programs, but is working toward resolution. One of the big challenges for our technical assistance is disclosure of all of a government's financial commitments, including the stock of public and publicly guaranteed debt, both explicit and implicit, including state-owned enterprise liabilities and debt-like instruments. In my prepared remarks, I go through several examples where we're making progress in that area. And while there are many examples of progress, Pakistan, Benin, Ethiopia, and so on, I want to raise some remaining steps that we should work on. We're lagging in the progress on confidentiality clauses in official contracts. We still see need to make much more progress in helping our member countries exit them, and in most cases, discontinue the practice. This confidentiality clause process is blocking development progress in a number of countries and ends up reducing the quality and quantity of urgently needed investment. We also need to make progress on making sure that all official bilateral creditors, including policy banks, need to participate in the debt suspension. For example, full participation of China Development Bank as an official bilateral creditor is important to make the initiative work, especially since it has played such an important role in providing development assistance to Africa. We should resist efforts to narrow the scope of debt covered by G20 Debt Service Initiative. It should cover all external long-term public and publicly guaranteed debt, not just government and explicitly guaranteed government debt. This should include the external debts of SOEs with implicit government guarantees, the the upcoming G20 meeting will need to work hard on avoiding this narrowing of the scope. There needs to be clarity on classification and disclosure of all debt-like instruments, including long-term bilateral swap lines that are often used as funding sources with a multi-year commitment, as we've seen in Mongolia. Such long-term commitments are also undermining macro stability. While a lot of attention has been focused on external financial liabilities of government, we also need to make progress in helping countries with long-term contractual commitments related to restrictive purchase agreements that result in long-term financial burdens. Long-term electricity PPAs and forward sales contracts are two examples working against good development outcomes. Commercial creditors also need to provide comparable treatment, discontinuing their collection of payments for the poorest countries, particularly for those that rely on IDA grant resources. The transparency issues I'm citing here are not unique to the poorest countries. Governments around the world find themselves offering less transparency for the financial commitments than they should. A glaring example is the systemic non-disclosure of outlay projections for most public pension obligations, leaving citizens with insufficient information on the commitments of their own governments. On this, the World Bank is leading by example by using our own financial statements to disclose both the funding of the pension liabilities and, importantly, the expected outlays over the coming years, a practice that would benefit many governments, including ones in this forum today. Looking forward, I think we should work to extend the debt service suspension through 2021, given the severity and long-lasting nature of the crisis. Some very heavily indebted IDA countries are already in extreme debt distress. Many more will be in debt distress before this crisis is over. In such circumstances, rolling over debt only kicks the can down the road. In such cases, we need to not merely reduce debt service today, but reduce debt service tomorrow and permanently. This will create light at the end of the debt tunnel for the poorest countries. For some of the hardest hit, a systematic reduction of sovereign debt stocks is the only way to restart growth, make new investment possible and profitable, and avoid an even longer poverty trap. So in conclusion, the coordination of creditors and debtors working together is important to resolving the latest wave of debt crisis. An inclusive platform should include all official bilateral creditors, reflecting the recent changes in the creditor landscape, and private creditors also private creditors to the public sector need to engage as well. Fuller transparency of debt and investment is vital and urgent, and I'm glad to see joint efforts in this direction. Thank you very much.
David, now we will move to the Deputy Prime Minister, the Minister of Finance of Korea. I'd like to highlight that Korea also holds the co-chairmanship of the G20 International Financial Architecture Working Group, which focuses on topics that are aligned with the aims of this conference. Mr. Hong Nam Ki, the floor is yours.
Thank you very much. Let me begin by extending my gratitude to Minister Bruno Drumari and Minister Mohamed Al-Jadan for arranging these forums in a timely manner. We are all in a critical moment where heightened volatilities in the capital flows and securing financial resources for pandemic response are becoming primary concerns. Thus far, cross-border capital movement has played a pivotal role in growing the global economy, as it facilitates the efficient allocation of resources and investment in emerging countries that lack domestic capital. However, capital market liberalizations can cause rapid capital outflows and fund shortage for low-income countries, especially in time of crisis. The recent historical capital outflow in emerging countries has reminded us once again that policy response and international cooperations are critical to minimize negative externalities. During the 2008 global financial crisis, the G20 successfully played its role as a global coordinator committed to a standstill on protectionist actions. In the face of an unprecedented global health and economic crisis, the G20's leadership shines through its policy coordination. The G20 has contributed to resolving the liquidity problems by preparing large-scale support packages, namely debt service suspension initiatives, expanded lending facility of the IMF, and MDB's $200 billion support measures. However, as uncertainties such as the possibility of the second wave of COVID-19 are still high, the G20's policy coordination should be further strengthened. To this end, I would like to emphasize 3 points we should keep in mind at this juncture. First, in this grave pandemic situation, we ought to make GFSN final and title to better respond to this unprecedented crisis as well as future possible crises. Based on our experience of responding to the pandemic, the G20 and the IMF should thoroughly analyze the effectiveness and shortcomings of the current safety net and pool our wisdom to provide a better backstop. Second, each country needs to prepare crisis contingency plans and reinforce their response capability in advance. In particular, they should take a country-specific measures since there is no one-size-fits-all solution. For example, Korea introduced 3 macro-prudential policies, such as a leverage limit on net derivative positions, a macro-prudential stability levy, and the liquidity coverage ratio. In this regard, the IPF integrated policy framework developed by the IMF is expected to serve as a good policy guidelines as it seek out an optimal policy mix that reflects country-specific circumstances. We, the G20, will actively cooperate with the IMF in this effort. Last but not least, deep and robust capital markets are important to ultimately mitigate capital flow volatilities. It is true that capital market development is hardly achieved in a short period of time. If individual developing countries' strong commitment is well supported by appropriate technical assistance and experience from the international community, such a approach will definitely produce desired outcomes. There is a growing concern over the globalization as countries put their national interest first amid raging pandemic crisis. But in times of crisis like this, global solidarity and cooperation are all the more important. The G20 should stand firmly at the helms and steer the way toward the common prosperity of all humanity. At the same time, the G20 should also prepare for the post-COVID-19 era, dealing with the inequality worsened by the pandemic and the socio-economic structural changes, such as contactless and digitalized lifestyle. Korea will offer utmost cooperations and contributions, and hope all the G20 and the party club countries will do the same to navigate through this tough time together. Thank you very much.
mute. Okay. And sorry again, thank you very much for your intervention. Now we have the Minister of Finance of Angola, Ms. Vera Davis de Souza. Please, the floor is yours.
Thank you very much, Mr. Bruno Le Maire, Minister of Economy and Finance of France, Mr. Mohamed Al Jadan, Minister of Finance of Kingdom of Saudi Arabia, Madame Kristalina Georgieva, Managing Director of IMF, Mr. David Malpass, President of the World Bank Group, fellow ministers of Mexico and South Korea, dear participants. On behalf of Angola, I would firstly like to thank for the opportunity to speak on this forum. As you mentioned before, tackling COVID-19 is the challenge of our lifetime. The global economy is facing an unremarkable shock. This pandemic has created complex decision-making processes, as the need to reopen our economies are counterbalanced by the utmost necessity to preserve lives. African countries are to be particularly affected, as our healthcare systems are still not robust enough to cope with an uncontrolled outbreak. We have obliged to implement lockdown measures. The social, political, and economic implications of the current pandemic are yet unknown, and Angola is not isolated from this. We are facing a triple shock: a reduction of oil prices due to the global slowdown in demand, reduction of oil production due to our commitments with the OPEC, and a health crisis. Nevertheless, we are committed with our reform agenda, with the IMF program, and we are very thankful for all the support that we are getting from multilateral and bilateral partners, as well as for the opportunity to participate in the G20 DSSI initiative. Despite all these efforts, additional support is needed to create more fiscal space to bring the necessary financial relief. Furthermore, as we accelerate our reform agenda to promote a better business environment, stabilization of our macroeconomic indicators, good governance, transparency on procurement, and so on, an opportunity is created for private investment. So we truly believe that this complementary approach will result in the increase of financing to the economy and also in long-term sustainable and inclusive and social development for our country. Once again, let me thank you very much for the opportunity to speak on behalf of the government and of people of Angola, and that God bless our countries. Thank you.
Thank you very much, Vera, for this informative intervention. Lastly, we have the Minister of Finance and Public Credit of Mexico. Mr. Arturo, the floor is yours.
Thank you, Mohamed. Can you hear me?
Yes,
hello?
Loud and clear.
Thank you. Thank you, Mohamed. Thank you, Bruno, for putting this conference together. It is really timely. I tested. Can you see me? I lost some of the image.
Yes, go ahead.
Okay. I tested positive for COVID a couple of weeks ago, so I'm doing this from home. If you happen to listen a small voice behind me, that's not a technical problem. It's the younger generation wondering who's going to pay for the fiscal stimulus. As I said, this couldn't be more timely, and there are very, very important distinctions that we have to do. As the pandemic unfolds first from China, then to advanced economies, most of the lessons that we draw from that early experience were coming from advanced economies. But the effects of the pandemic, the lockdown, and the capital flows are different and asymmetric depending on the on different classes of economies. And for us, we see at least three different kinds of effects. One, the ones that advanced economies are facing. Second, the ones that middle income economies we are facing. And in that sense, we have a special case in Argentina, and I join both Mohamed and Cristalina in wishing a sensible and quick agreement between Argentina and their creditors. And the third case is those of the low-income economies, the high economies. And we are very pleased to see the commitment to find a solution for this set of countries, in particular the commitment of G20 with Africa countries. Middle-income economies have a different kind of challenge. On the one hand, we are less subject to some of the traditional shocks, but still capital flows are creating a dent on our degrees of maneuver. Let me just share with you a couple of numbers. As opposed to, let's say, the 80s or the 90s, most of the debt in Mexico now is denominated in peso and is in long term. But still something around between 25 and 30% of our debt is denominated in currency. As the pandemic started hitting, there was a new sense of uncertainty in the world, and this was followed by a flight to quality and outflows from developing countries to safe havens. That create in early March a devaluation of the peso from around 19 pesos per dollar to 25 pesos per dollar. That was even before the lockdown. That increased notionally the debt at that point, but almost 7% of GDP. So even before Mexico started thinking about the fiscal stimulus, our debt was increased in valuation at that time on 7% of GDP, limiting very, very strongly our ability to face the pandemic. Now, what we think we need to do in this set of countries? One thing that we learned is that we have to recalibrate the timeline that we were facing. In February, when we met in the G20, we thought at the time that it was a matter of closing the economies, of locking down the economies for 2 to 3 months. Now what we know is that we need to close the economy. We indeed were closing the economies for 2 or 3 months, but the recovery is going to be much more slower than we thought. The timing of the recovery is conditioned on the timing of the pandemic itself, and we won't be able to have a full recovery until a cure or a proper medicine is found. That means that we middle-income countries need to have some power drive, because this is gonna last at least 1 more year or to a year and a half. It's not about just providing support for the economy right now, but providing support for the economy for the next couple of years. Finally, I want to mention made a couple of comments. As we having been worried and focused on these issues, which we could assume there are some sort of external shocks, idiosyncratic challenge have gone to the background, and those problems need to be addressed at some point, because the pandemic has created a reduction of the fiscal space and the ability to respond to them. For Mexico, these are the traditional problems: a lack of growth, inequality, and probably some of the underlying reasons: lack of investment and the lack of proper on revenues. Let me make a reflection about that, paraphrasing what Gita Jopinath mentioned a couple of days ago. She said it was not the time to start doing fiscal consolidation, but it was the time to start planning for fiscal consolidation in the future. It is not a time to start addressing the idiosyncratic challenges that each country had, but it's a time to start planning for them. Down the road, we will need to do something about it. Thank you, Mohamed.
Thank you very much, all, for your valuable and insightful interventions. Obviously, these have set the stage for our discussion in the 3 breakout sessions. The breakout session number 1 will focus on sustainable financing for African development and will be chaired by Minister Bruno Le Maire. Breakout session number 2 will focus on policy options to strengthen resilience and bring back sustainable flows of capital to emerging markets. This session will be chaired by Ms. Carmen Reinhardt, the Chief Economist of the World Bank Group. The breakout session number 3 will focus on enhancing resilience and more sustainable sources of financing for the future. I will be chairing this session. Our technical teams have already shared all connections with you for the 3 breakout sessions. So we will take 5 minutes, no more than 5 minutes, to connect to the breakout sessions. I've consulted with my colleagues, the co-hosts, and because we are running late, we will limit the breakout sessions to 45 minutes, and we will reconvene after the breakout sessions for the second plenary session at 5 minutes past 2 GMT time. So we'll see you very soon in the breakout sessions and in the second plenary session. Thank you very much.